Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashni.
So tell us about West Wits Mining reviving a West Rand underground gold mine.
You know, this is only 15 kilometers from Johannesburg. This is the old Rand leases and DRD activity, which ended at the start of the new millennium, not long ago. Now, this Australian listed company has come in, and it is already clearing bush and starting to rehabilitate the old shafts, and it's got a lot of optimistic results of its feasibility study. So right close to us are shallow opportunities. This is about 500 meters deep, and then deeper opportunities as well. So this is their first project around there, but it just shows you how quickly people can get going once they get their mining licenses in reviving what is really was the world's biggest gold treasure trove in history. But there's still so much to get there, as these people are finding. The problem here is that, you know, they list in Australia. They have to list in Australia, because if they try and list in Joburg, no one wants to support them with a listing opportunity. So they are hoping to do a secondary listing here. They're hoping to establish this as a base to go into Africa as well, and they're hoping to do a lot more to revive the Wits Basin, and they're not the only ones. You know, there are shallow opportunities here. Our mines traditionally have wanted millions of ounces of gold. They weren't prepared to do these small opportunities, but these are important for us, and they will create jobs soon, and there's going to be a contractor appointed, and there's going to be activity there, which then feeds through to the engineering business, it feeds through to the banking business. They will be raising debt, it feeds through to the catering business and all aspects of our economy. So one would hope that, you know, the saving funds in that Johannesburg Stock Exchange, some of it could go into these smaller companies, or alternatively for us to follow what happens with the flow-through scheme in Canada. You know, we've pleaded with Treasury. They don't seem to be concerned about, you know, making sure that the mining industry continues. They are very Western Cape orientated. They've got to wake up, and hopefully they will.
Martin, tell us about the unexpected consequence that is causing South Africa's junior mining dearth.
30 years ago, there was a reform, a financial reform was put into process. And the advisor to, you know, the then Finance Minister, Derek Keys, did a study. And then that was implemented and put into various bits of legislation. The actual Jacobs Committee report indicated that there would be more listings, and you know, there would be savings for smaller companies. This has not happened. There's an unintended consequence, and the way these big savings now have been gathered up, it's impossible for them, in terms of their rules, to look small. So you've got no more small investors going into small mining, and it's an unintended consequence, but nobody seems to be prepared to fix it, particularly Treasury. Now, I think Treasury must realize that they are our servants, not our masters. They have got to ensure, for the good of the South African people, that we have a future here. But they are not even responding to Mining Weekly's questions. You know, we put questions to them, they acknowledge receipt. Well, firstly, they don't acknowledge receipt until you get back the second time. Then they say, yes, we've got these, we're working on them. How long does it take to work on them? Why can't they answer one? Or, you know, just give us some indication. They have become a little demigod, the Treasury. And if they continue like this, to be so Western Cape orientated and to be so big savings orientated, we're not going to have the activity that you have in the other mining jurisdictions. You're not going to have what you have in Canada. You're not going to have what you have in Australia. You know, every day I'm reading more about Australia. They're knocking us into a cocked hat, because they know how to deal with these things. I mean, yesterday they said they're going into vanadium. Well, gee, we didn't expect, you know, Australia to go into vanadium. That's our metal, but they're going into everything, all the critical metals, all the lithiums and all the, you know, the coppers, and they're going to cobalts and everything else. We are not doing it. And we, as a country, are being saved at the moment by a great big wave of benefit from the mining industry. And those funds are flowing into the Treasury. but they won't flow in 20 years' time. Now, has the Treasury got some different plan? They must let us know, because they are damaging this economy really badly, and they need to look at themselves in the mirror.
Lastly, Martin, Pan-African is reducing its reliance on Eskom for electricity.
Yes, Pan-African Resources is an excellent gold mining company, active in the Evander area, active in Barberton, and they had tremendously spectacular results, paying record-breaking dividends. And one of the aspects that the analysts were questioning them on was costs. And one of the replies was that, by using their own solar power and by releasing and limiting their dependence on Eskom, it's going to be a cost-saving factor. And I think this is a very important consideration at the moment, because not only are you making sure that you have electricity, but you're also making sure you have lower cost electricity. It's bringing your costs down. Now, they were very early movers in this, and they were even prepared to come in at slightly below 10 megawatts, which was allowed at that stage. They got Ilikulu going, and that has become their model now, this 10 megawatt model. So it's going to Evander and the other plants. So they are looking at a 30% reduction in consumption of Eskom electricity. So you're not only getting greener and cleaner, you're getting cheaper, you're getting lower cost, you have got security of electricity. But one point they did make is that they won't be putting any storage in at the moment, because this is, in their view, too costly at the moment. But with this 10 megawatt model, they release and lower their dependence on Eskom by 30%, their consumption by 30%, their costs by 30%, but it will only be in daylight. So they are going to be heavily solar orientated, daylight. So when it comes to darkness, they haven't got wind to back that up, they haven't got storage. So they are then going to fall back on relying on Eskom. But you can see how, a company like this with intense, determination to get their own electricity going, how well they've done in a short time, to get these 10 megawatts and now another 10 megawatts and use this 10 megawatt throughout the group, the model, and to get their costs down, to do everything that's correct, for the E and the ESG. And they are very good ESG players, even in the S. They're growing berries for the people of Barberton. They're doing a lot to help the communities. So it's an excellent company, doing very, very well at the moment.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.